The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the December 26th, terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. Hope everybody out there had a fantastic Christmas holiday. Nice little day off of rest. We're back to work, and this is the tool I call Destiny is not a matter of chance. It's a matter of choice. And you know what, folks? It's not a thing to be waited for. It's a thing to be achieved. Question. Have you ever heard someone say, I don't know what I want to do with my life? I have. And if you think about it, it's the same thing as saying, I don't know what I want to achieve. My response to that is simple. Shoot for the moon. I mean, if you don't get there, you'll still be heading for a star. And isn't that what life is all about anyway? I've been fortunate to have achieved many great things in my life, just as you have. If I didn't shoot for the moon, I never would have owned and operated retail stores and Disney theme parks and tourist attractions around the world. Heck, if I didn't shoot for the moon when it came to learning about technical trading, I most certainly would not be with you here today. And if I didn't have the passion to unlock the keys to the markets, I never would have solved some of its greatest mysteries and hidden signals that make it easier to call the markets each and every day. And these folks, these are signals that I can teach you. In fact, we'll take a look at one of them here this morning. You know, have you ever seen the movie National Treasure with Nicolas Cage, Jon Voight, or how about Raiders of the Lost Ark with Harrison Ford? You know, those movies portray individuals chasing their passion, and in the end, they do find their treasures. This is exactly the feeling I've experienced because of when I was able to create the Rhodes Momentum indicator, market scanner, trading strategy out there. You know, when Julius Caesar, he decisively defeated the king of Pontus, and he announced his victory in Rome this way. These immortal words, he said, I came, I saw, I conquered. These are 6 great words to live by, 6 great words to get each of us on track to achieve anything it is that we want in life. All we need is the persistence of that little engine, that little red engine that could. You know, that engine that says, I think I can, I think I can, I think I can. Well, I say at the end, you change that to, I know I can. Say that to yourself each day when you wake. What kind of day do you think you're going to have? Napoleon Hill, he said it best. He said, whatever the mind can conceive and believe, it can achieve. Folks, you see, locked within yours, within mine, within our super conscious mind are the answers to our questions and the secrets to the mysteries that each of us encounter. Making a decision, look, that's like putting a bit in a horse's mouth. The bit is probably the smallest part of the harness of the horse's mouth, but it's the most important part. With this bit, we can control the movements of the horse and guide it in any direction we want to go. Every little bit counts, folks. I say shoot for the moon because even if you miss, you'll still be a star. So let's go look at our lucky stars out here right now. Dow futures are trading up 52 points. They're trading out at 16,355. ES Mini, it's trading up 4 points out at 1833. NASDAQ futures up 7.5 points. They're trading at 35.77. Russell 2000 futures, they're up 3. King Dollar up about 2 pennies right now. It's trading at 80.69. Not a ton of movement in the currency market. Looks like the Japanese yen probably the biggest mover here. Hard currency on the move this morning. Goldilocks is up $9. It's trading out at 12.12. Silver's up 38 cents. That's a little bit bigger move there. About almost 2% this morning. That's trading out at 19.87. Light sweet crude is up 26 cents. It's trading at 99.48. Our call-in number 877-927-6648. give us a call. Would be happy to take a look at your stock chart. Over across the pond here, I don't know that they're trading in the. I know that it doesn't look to me like they're trading in Germany or in the UK. I think it's Boxer Day out there. So I don't think their markets are closed. Over in Asia last night, though, they were open. You had the Nikkei. That closed up 164 points. That completed at least its a move of a consolidation pattern. We'll go take a look at that. The Hang Seng was up 257 points. But let's start off by, let's go take a look at the daily charts here for our futures contracts. Let's go see where they are headed to. And let's start off by looking at the ES Mini. That's the S&P 500 futures contract. It created and it formed a beautiful Gertley buy pattern. It did that on the trading session of December 16th. That was when it made a 0.786 retracement. What I mean by retracement, folks, we're taking a look at what I call little major intersections on a chart when you're looking at it. Those are called swing points. We go from one swing point to the next, and we take our little ruler. You see, we use a ruler that was created by Leonardo, not DiCaprio, but Fibonacci. And we use that ruler, and we take a look at areas called retracements such as 0.382, 0.618, and 0.786. Those are the three retracement levels. They act as elevators, as if you were to walk on an elevator inside a stock market, and they will act as areas of support, resistance. In this case here, it was an area of support. What it also did was it made an expansion of swing points. In this case here, it was a 1.618 expansion. You see, there's two expansions, really three expansions. Just like we have three retracements we focus on, there's three expansions, those being 1.272, 1.618, and 2.618 out there. Now, we use those as guidelines to identify projections of price when we're inside trades or investment. That way, you have each trade, each investment that you're in bracketed, and that way you are taking money off of the table. In this case here, the way that the ES Mini came off of the C point, it was massive. It was big. It was wide-ranging. It was communicating to us, no, I'm not going to do a 1-to-1 A to B equals CD. That price projection, 1829.93 to be exact, what we saw of the Tuesday, so I get my days straight out here, the actual high was 1829.50. You got to like that. But that is not where price stops on that 1-to-1 A to B equals CD. You see, folks, you want to learn how to master, if you'd like to learn how to master the A to B equals CD pattern, then you should go check out my, click on my name on the homepage of TFNN.com. There's a workshop that's available. You'll see that after you click on my name, it'll take you to it, and it talks about buying and selling the D point. I will teach you how to master that C to D leg. In this case here, it was communicating to us loud and clear that what it wants to do is more than a 1-to-1 A to B equals CD. Couldn't have been more clear. That says 1850 is what the target is for the ES Mini. You're traded 1832.25. No, that does not mean that it happens today. Can't say that it's going to happen tomorrow. Can't say that it happens on Monday or Tuesday of next week. But I'd say pretty good chance that it does happen by Monday or Tuesday this week. That's another, almost another 20 points or so up on the ES Mini. But we'll take things one moment at a time, one day at a time. There are no bears that have been in that you can spot anywhere in sight here inside of the ES Mini that we need to be paying attention to. That's on the daily chart. Let's go take a look at the Dow futures out here. They're trading up a nice, 50 points or so. They're trading out at 16,352. It, too, formed a beautiful 0.786 Gertley buy pattern. But boy, it did something even better than that. It came all the way back into this yellow shaded area, a 1,000-point consolidation move. That 1,000-point consolidation move at about the 15,500 level. That says at 16,500, 16,600. That becomes its target because that is a measured move. Consolidations are one of the coolest patterns out there because when you break a consolidation, when you come back and you test it, and it holds, it's telling you that the breakout is real. In this case here, well, the way that price came off of the C point of that, it's A to B equals CD up. It was already telling us it was real. It was telling us there's not a chance that it's only going to do a 1-to-1. That price projection, by the way, was 16,312. The actual number that was hit on Friday at the high was 16,305. You got to like that. You're trading above it now. 16,500-ish, 16,600-ish is where the Dow futures are headed to. Not that they can't trade higher, because they most certainly can trade higher. What we'll have to do is we'll just simply have to watch the volume. We'll have to watch for candlestick signals. You see, the bulls and the bears, just like you and I, they go to work each and every morning. The cool thing is that on a chart, bears and bulls, they make signs all day long. In this case here, the signs that they are making are none that suggest a reversal or that a high or that a top is in place inside of the Dow. If we go take a look at the NASDAQ futures, take a look at the NQ out here, it too has an A to B equals CD. It did not form a Gartley buy pattern out here. Just never had the A to B equals CD down. Its 1-to-1 price projection is 35.81. Right now, the inter-session high today has been 35.78. It wants to do more than a 1-to-1 A to B equals CD up. Looks to me like this wants to try to make a run for about 36.26. You're at 35.81 right now, so you're 35.76. So what does that make it? Another 50 points or so left at least. At least. I'm not saying that 36.26 is the top. I'm just saying that is the next level that it wants to run to. If we take a look at the Russell 2000 futures out here, so you got all the indexes. They're all pointed north out here. Of course, our compass. Actually, let's go to our compass. That's the North Pole out here. That North Pole says the markets want to move higher. That North Pole is nothing more than the euro, Japanese yen. You can see that it has taken out its 1 to 1.618 A to B equals CD up. The euro, Japanese yen, that's your friend. That's my friend. If you're a bull. If you are a bear, you do not like this currency pair when it's headed north. And it is headed to the next pole. And that's at about 145, the 1 to 2, A to B equals CD up. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pizzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures up 48 points right now, and I hope everybody had just a great couple of days here. You know, we've got 4 more trading sessions left in the year, and the most bearish pattern that I could find out there was inside of the Dow, and the price movement on Friday, actually at this stage, and it's on a monthly chart. We're going to take a look at that here just in a few moments out here. So if you are listening on your radio, your mobile device at tfnn.mobi, thanks so much for doing that. Remember, you can catch the archive of this show on Channel 9, and you're going to want to do that. And at least tune in to the this 9:30 segment here as we go take a look at other patterns that are present at significant market highs. We're going to take a look at inside the Dow. Now, this chart here, when we go take a look at it, doesn't complete until the 31st. But I can tell you that it had been the one chart out there that was saying, boy, there could be some type of market top in here of seriousness. But the action, quite frankly, over the last week, this Santa Claus rally, and certainly it was Friday's price movement that actually moved. So even though things are quiet out here, there are little subtle things. And I teach those in my with my Rhodes Momentum trading strategies. If folks, maybe Santa delivered everything to you. There's one thing that you might not have received, and that is my as a subscription to Mastering Probability. So look, I am Stevie Claus out here. Comes with a 30-day unconditional money-back guarantee. Plus, you get a money management workshop that's an absolute must. That's worth $149. You get use of my position size calculator. That's another $50 out there. So take advantage of that. Go and be resolute about your New Year's resolution. Let me show you a pattern that exists out here, because you see, one of my passions in taking a look at technical analysis was trying to understand when a market was making a significant high. Didn't matter what kind of market it was, whether it was a stock market, currency market, a commodity market. And if we take a look at the Dow, this is a Dow chart that I'm showing on my screen, and what the Dow showed was a divergence between price and relative strength, and that happened well before the crash of 1929. So folks are out there talking about, difficulties in the economy and jobs, and look, all those things are true. But what you don't want to do is you don't want to correlate life to the charts. You want to just simply trade what you see. And what I can tell you is that any significant decline, any significant market top, any significant crash, anything has always been led by this one pattern. You see, I spent a lot of money to go have a ephemeris. That's where you have all the planetary aspects out there digitized so that I could apply those to a chart to see, hey, was there something unique out there with regard to planetary alignment? And I found a lot of great things, but no tool that existed there was as good as this one. We saw price divergence out here as the Dow was making its high in 1929. We also saw when the bottom came in, when you could actually go buy the bottom after that crash, and that showed a price relative strength divergence. That's not the only one out there. Let's take a look at the 1987 crash. Remember, we were just taking a look at 1929. These are not just crash cycles, but I'm using these as examples here, a couple examples. Here's the Dow divergence before the 87 crash out there. You had price relative strength. Now, it's not just enough to identify the divergence. You really must understand the signs that the bulls and the bears leave out there. Here's the Dow. This is the divergence before and after the dot-com bubble. You can see it was making a price relative strength divergence at the top as well as at the bottom in order to be able to take a long position in the marketplace. Here, how about at the 2007 highs? This is a weekly chart that we're looking at for the Dow. And how about at the 2009 lows? Guess what we had there, folks? We had price relative strength divergence out here. Pretty interesting, huh? Works on all time frames. Here is the Dow at the 2000. There was an intra-period high and low in 2011, 2012. What do we have? Price relative strength divergence. Here, maybe you trade the ETFs. Here's the FAS. That's the ETF, folks, for the 300% of the financials out here. Here's on a 10-minute chart out here. It shows a top. It shows a bottom out there when price actually reverses course. Here's light sweet crude on a daily chart. At the bottom in the $75 level out here. Here is the 30-year Treasury bond. The 30-year Treasury bond peaked, made its high July 25th, 2012. Guess what accompanied it? That's right, price relative strength divergence. Folks, I haven't cherry-picked this or anything. Here's the 30-year Treasury bond on a 10-minute chart as it was making a high, as it was making a low out there. This is not about, here's Apple at the highs. Price relative strength. Here's Chipotle at the highs. Here's the S&P 500 again at the 2012 highs out there. Folks, the Rhodes Momentum Trading Strategies, and that's not what we covered here. My service, Mastering Probability. Do yourself a favor. Take some of those shekels that you received over the holiday. Go, because all you're doing is putting down a deposit. It's a $149 deposit for 30 days worth of education like you've never seen before. Folks, become resolute about whatever New Year's resolution you're making when it comes to trading and investing. Mastering Probability. When we come back, we're going to take a look at the current Dow monthly chart, and we'll see what's not there. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 52 points. It's trading out at 16,410. S&P's up 4. They're trading at 1837. Composite up 11 points. It's trading at 4166. Russell 2000 up $3.50. It's trading at 1165 out here. Tesla leading the charge to the upside up $4.57 out here. We've got Apple up $1 right now. It's trading at 568. Microsoft up 26 cents. Twitter up $3 right now. 3D Systems up $3.42. Go. G-O-G-O. It's on the go. It's up 6% this morning, up $1.68. To the downside here, you've got Oramed Pharmaceuticals. It's off $2.41. That's down 16%. ORMP is the ticker symbol. GDP, that's Goodrich Petroleum Corporation. That's off 6% this morning. That is down about, what is that, down about 6% here. Let's go to Victor in Paramus, New Jersey. Victor, thanks for calling. Thanks for holding. How are you this morning?
Yeah, I was looking at Ford. Ford's back into like February of 2011. There's some big volume days. It's at 1524. Is it headed lower, or what's it doing, or is that just distributing it right now? You look in February.
Well, Ford is definitely not a buy at the moment. Oops, give me a second here. I got to give me a minute. So, are you looking to get into Ford?
Yeah. I was looking to get into it. Yep. But it looks like those volume days.
Okay.
24 back in February. There's these 2 big weeks where they were distributing it right back into there.
Yeah. Right. Well, give me a second here to pull Ford up on. We're going to take a look at it on a couple of different, with a couple different charting tools out here for you, Victor. Give me a second here just to refresh some data and bring up Ford. But you're absolutely right. It did have a big downdraft volume day. That was on December 18th. I don't know what was behind it, but it had 220 million shares to the downside. Actually, Ford gave a signal. What was that?
Their sales are going to be slower, but. Yeah, their sales are going to be slower overseas and over here, and they have money, their top-line profits going to be a little less.
Yeah. Now, Victor, are you watching, by any chance, are you watching this on Tiger TV?
No, I'll watch it when I get home, though, tonight. I'm at work right now.
Okay, do that. So the first chart that I'm going to put up on my screen here, it's using the new set of tools, Rhodes Momentum Indicator, that I've built out here, and this shows when you take a look at it at home tonight. This shows on the bottom portion of the chart is the daily, and the upper portion of the chart is the weekly. So we're going to call the weekly our primary trend because you're not looking at day trade. In this, you're looking at making a trade out of it, an investment out of it. And in the case of Ford, gave you a big old bearish engulfing candle the week of November the 4th out there. And while it was doing that on the weekly, the daily was also giving us a little sell signal out there. And we saw a little bit of a small counter-trendish rally out there, but it really broke to the downside out here right around December the 16th. And on the weekly chart, it is in an absolute established sell mode right now. If, in fact, you were to see Ford, though, let's say next week, just as a parameter here, were to close maybe above, I got to move this over to the left here. If we're to close above the high of this week, that might change things. You'd have to give me a call back, and that's 1550. Right now it's at 1527, but it's absolutely in a sell mode on the weekly chart. It's certainly in a sell mode on the daily chart. And you want to be able to use that tool to see when the momentum has changed, because that tool showed that the momentum was changing as it was up towards its highs. Now, you want to take a look at buying Ford. What's that?
9-day. No, I got your website going. Do you use the 9-day moving average? I saw those two things. So what are those two averages? Do you have average?
I do not. Those are some modified moving average tools that I use. So it is not the 9-day moving average, and it has much more to do with that. You've got to be able to identify these hidden signals, these little momentum spots out there. I just simply call them momentum signals. So where Ford is likely headed to, just from one technical analysis aspect, is likely back to its last swing point, which is this little doji candle from June 24th out there, and that's got about 58 million shares, and the low is 1430, and the high is 1483 out there. That's probably where price is headed to. If it can't hold that level, let me see here. I'm going to put Ford on a weekly time frame on this chart. And let's just take a look at the trend that's out here, because it looks like this also may have broken a trend line coming back from the lows that were established back in August of 2012. No, it has. In fact, it has. It has broken. So last week, it actually even broke a longer-term trend line. That was going, Victor, from August in 2012 up to the high that was put in here October 25th. So just normal retracements from the low there to the high says 1451. That's your 0.382 retracement. But it looks like maybe what Ford has in store for us for some reason is a pullback to about the 1233-ish range out there. But no matter what, whether it's 1451 or it's 1233 or somewhere in between, then you don't want to take a long position in this until we actually see a shift in momentum, a shift in trend out there. Otherwise, any bounces could really just be some counter-trend rallies inside of Ford. So that's how I would take a look at it, my friend.
Okay, thanks, sir. Have a good one.
Okay,
Bye.
You bet. Thanks so much for calling. Now, folks, I want to go back here, and I'm going to pull up the monthly chart for the Dow. So right now you've got the Dow is traded at 16,410 basically, up at its all-time highs, clearly. And this is a monthly chart that we're looking at. Now, the segment that I did before the market opened, what I took a look at is the most consistent pattern for being able to identify significant market tops as well as market bottoms out there. And that means I've run through the gamut. I mean, I went and looked for every potential celestial type of set of parameters. That includes the. How can I have a brain fart like that? That includes the. Oh, geez, Louise. Well, we'll skip that. So I'll come back to it. But in essence, I've got, part of my passion was to go back and really first be able to identify when is the market making a high, when is the market making a low, and what type of signals will be out there. And so is it lunar signals like full and new moons? Was it a combination of a full moon and an eclipse, or a new moon and an eclipse? Was it a combination of, Venus conjunct whatever it might be? Was it some type of combination? Was it 5 or 6 conjunctions occurring between planets occurring in a 7-day period of time? I mean, I went out and I looked for everything. And what I came across, as a hidden treasure out there, was that price relative strength divergence, as I shared with you during that first segment. So if you're just tuning in now, go catch the archive on Channel 9, because it's the most consistent. Doesn't mean that things will always be the same. In fact, if we take a look at the trend line out here, you've got a trend line, nice trend line, coming back here from the highs in 2000. This is the high in January 31st, 2000. Dow was up at 11,750.28, or made high there. And if you go take a look at the trend line, meaning the high of October 31st, 1st, 2007, that high 14,198. If you just use the top of that candle session, the shadow, the upper wick, if you just simply attach those two, just like when I was taking a look at how Ford had broken its trend line with Victor just a few moments ago, well, here's a trend that was broken to the upside. Guess what? This trend line, this area here where people, and you can see I got dash lines going across my screen there just so that it's more clear that the trend has been broken. Trends were also meant to be broken. So just because prices moved up to that trend line, that doesn't mean that's where price is going to stop. Look, folks, I can tell you a thing or two about trends. Those of you that have a couple of years on you, you probably owned, as I did, some of those fire retardant suits out there. They call them leisure suits. Some of you may still have them in bags. Maybe even some of you still have some of those puka shells, that we used to wear at disco clubs out there. Or maybe even some shoes with some heels on them for guys out there. Trends, folks, guess what? Trends come, trends go, trends change. In this case here, all that trend was doing, taking a look at those two highs, was nothing more than a trend in a natural area of resistance. Now, the month is not over. It's possible that price will go ahead and duck its head underneath that trend line, but just because a trend line is there does not mean that price is going to stop. We just took a look at Ford. Ford broke a trend line to the downside. So if you can accept that logic, why wouldn't you accept the logic that trends can be broken to the upside here? Now, here's the key. When the Dow was making its high back in 2000, when it was making its high back in 2007, and we're taking a look at a monthly chart, there was that price relative strength divergence. And guess what? We had that up until Tuesday. Tuesday was a light volume trading session, but it was enough with maybe a close of about 60 some odd points or what have you, and it was enough to actually push that RSI line up above the last previous high reading. The last previous high reading came in the month of July 31st, 2013. It came in with a reading of 73.86. Right now, we are trading at, or it is trading at 74.55. This is not about Steve Rhodes being bullish or bearish on a market. This is nothing more than you tuning in and us taking a look at the chart, because I am agnostic when it comes to which direction price is going to go inside a chart. All I wanted to do is to communicate to us what it is going to do. So even at this stage here, if the Dow finishes up around this level, if we don't see any kind of significant pullback between now and the close of session next Tuesday, even if there's a little bit of a pullback, we'll have to come back and measure what that relative strength index is, because if it is not out there, what it actually says, folks, is we are more likely 4 or 5 months away from any kind of a major top that's being put in. Now, in the case of the Dow, we were taking a look at some consolidation patterns earlier, or we'll go take a look at another consolidation pattern here momentarily. In the case of the Dow, it had been in a 5,500-point consolidation. It broke that consolidation, and it broke it with conviction, you'd have to say, the month of January in 2013. The Dow has about a 5,500-point consolidation projection. It says that it should run up to the price level of about 18,500 or so. That would be doing nothing more than making a measured move. Remember, consolidation patterns, folks, let me go back out here. Consolidation patterns, they're really beautiful to trade. I don't show it here. I got to think of where I've got a consolidation pattern that we can go take a quick peek at. Where is it on my chart? Maybe it's on the 30-minute chart. Let me check the 30-minute chart here. There we go. Here's a 30-minute chart here, and this is for our friend the Euro-Japanese yen currency pair. So it has not. You can see this was if you're watching this on TigerTV, you're going to see a yellow squared box, rectangle, not squared, a rectangle box out there, and that rectangle represents a consolidation. That's with price traveling between the low of that box and the high of that box. When we saw here, when the Euro-Japanese yen opened up late last night, it actually gapped up. It gapped up above the consolidation box. So the move inside the Euro-Japanese yen ought to take us to about equal to or greater than that actual consolidation pattern. That ought to take us to the 144.65 level. And the cool thing is about the Euro-Japanese yen, it's actually the rocket fuel for the stock market out here. So long as that pattern goes ahead and completes, and it broke this consolidation now, so long as that pattern completes, that will go ahead and put higher prices into the market coming into the January time frame. When that pattern completes, it's at that point in time that we could experience some type of a little bit larger pullback out here. But that pullback really becomes a buying opportunity versus a selling opportunity. That's where you go ahead and you keep your powder dry unless we see some other form, some other signal out there, such as volume off of the top. And thus far, we have not seen that. In any event, since we're in the currency markets, let's go take a look at the daily charts here, or weekly charts for currencies. Here's the Euro Japanese yen. This currency pair says 144.33. Well, that's next on its horizon. That's because that is a weekly primary trading range. It's nothing more than a horizontal level of natural resistance. Doesn't mean that it can't take that out. The 0.786 retracement, folks, that means going from the highs back in 2008 down to the lows in 2012 in this currency pair. Says it wants to go to that next floor. That's at about the 150 level. That's very bullish out there for our markets. That's on the weekly chart for the Euro Japanese yen. If we go take a look at the U.S. dollar Japanese yen here, I will see that too has broken. Now, this broke a trend line just as we were taking a look at Ford out here. Ford was in a downtrend. In this case here, the U.S. dollar, Japanese yen. The red diagonal line going across my screen, more so a channel line versus a trend line, but they're both the same. One just simply uses the body of the candle, which is truly the essence of price. So that's why we like to take a look at those channel lines versus a trend line. The trend lines are nothing more than the emotional extremes of where price had traveled to. Nonetheless, both the trend line and channel line inside the U.S. dollar Japanese yen was broken. That was back here on November 8th. At that stage, if you were short the U.S. dollar Japanese yen, you'd have to say, why? It just broke a trend, and we can see that trend has continued higher. You gapped up this morning. This wants to trade to. Let's just take a look at expansions of swing points as well. That means coming off of the high from May 22nd, 2013, down to the low on June 13th out here of 2013. That says 106.43. So the 105.85, 106.43 is likely where the U.S. dollar Japanese yen is headed, and that is on the daily chart. If we go take a look at the Queen out here, and it is Boxing Day over in Europe, so their markets are closed. The euro here really not doing a whole lot. Now, this is the weekly chart. I guess I shouldn't say not doing a whole lot. The euro, which had been trying to break out, it ran into a significant channel line, a significant trend line, and that's the red diagonal line that you're looking at on my screen out here, as well as the black one. Both of those go back to July of 2008. Hey, folks, if the euro actually breaks through this trend, that'll be pretty important, just like we looked at on the U.S. dollar Japanese yen. But thus far, the trend is resistance inside the Queen out here. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow is up 63 points right now. S&P is up 4, trading out at 1837. And the Nikkei last night, what it had done here, broke above the this big old bearish reversal candle that took place on May 23rd. That was a big old bearish engulfing candle out there, closed above that high, which was 15,942.60. Now, if you're watching this on TigerTV, you're going to see a number of very cool patterns out here. There's a 0.618 Gartley buy pattern that had formed. It formed on the trading session here on August 20th. Price just kind of hovered right around that level for about a week or so, and then it was off to the races. Now, when it was off to the races here to the upside, what it actually also did was it formed one of these little consolidation patterns. Now, this is a shorter-term consolidation pattern, but I want to be able to show you how this works out here. This consolidation pattern began on September the 3rd. Down at the lows of about 13,750 out here, and the top of the consolidation, we'll call it right about the close of the body on November 14th, right around the 14,870-ish type level. Now, on Tuesday, what this actually did was it completed that pattern. Now, a consolidation, when price moves above a consolidation, the move is going to be equal to or greater than the actual consolidation. Well, it's done that here. When, in fact, what it has done, what the Nikkei has done, it's made the 1 to 1.272 A to B equals CD. The price projection on that pattern was 16,185.31. The close at 16,174. It actually got up to 16,186 last night. I can see let's take a look at the weekly chart out here. Let's take a look at a weekly time frame for the Nikkei and see if we can figure it's possible. I don't have the volume here, but what we'll need to take a look at is what was the volume as it got above that May 24th bearish reversal pattern, both on a monthly chart, on a weekly chart, on the daily chart, because that could be a large A to B equals CD up. I mean, that one is a doozy. If that was passed with volume, that would then say that what the Nikkei wants to do is get up to about the 19,851 level, 19,800. Guess where that takes you back to? The 2007 time frame. Much like what it is that we are going to see inside of the NASDAQ composite. Here's the NASDAQ composite. it at least wants to tag the March 31st, 2000 swing point. The low is 43.55. Your trade at 41.62. It had a 1,500-point consolidation that was for 12 years out there. It broke through that consolidation. The initial price target on that is 4,400. That is where the NASDAQ Composite is trading to. Do not be afraid of higher price. Higher price, folks, says that there's no resistance, and that means that you have a great party out there, because it means that everybody is in the money out here. Back to the Ford chart here. I'm going to put that up on the screen here once more for Victor and anybody else that's taking a look at it. This is the Rhodes Momentum Indicator signals that are on here. You'll see these little green and red boxes on my screen out here. These are what you really want to be focused on and paying attention to when you see, in this case here, Ford from November 1st. From November 1st forward, all we have seen are green boxes. Those green boxes tell us one thing, and that is that the sellers are in control of the stock inside of Ford. This has not seen any buyers really whatsoever. We've seen a couple of counter trend moves out here. That's the blue area that you're looking at on my screen here. Unlike if we go back, and this is where you really want where you want to understand the trend, or at least you want to be able to have a system that shows this to you. You want to make sure that in this case here, back in Ford, all kinds of little red markers, those red markers giving us an indication that the buyers actually had control of the stock. But that is not the case as we speak here right now inside of Ford. So you've got, we'll take a look. We didn't take a look at gold and silver. We'll do that during the next hour. If you're off to start your day, have a terrific Thursday. I look forward to seeing you tomorrow morning. And always remember this, folks. You have an amazing power within yourself. And that power is so strong, it'll create a life of abundance. It'll cure incurable diseases, build billion-dollar businesses, but most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFN family. Have a great Thursday. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.